Hello, everyone. Good morning, good afternoon, good evening from wherever part of the world you're listening to this presentation. It's a privilege to speak to you today on a subject that sits at the intersection of cutting edge physics, advanced computing, and the fast paced world of finance. As we know, today's financial markets are already driven by ultra low latency trading strategies, massive data analytics, sophisticated algorithms. But as traditional computing approaches their physical and performance limits, we are standing on the edge of a new technological frontier, the quantum computing. Quantum computing isn't just another leap in speed or storage. It's completely reimagining of how computation works by leveraging principles like superposition, entanglement. Quantum computers are capable of solving certain complex problems exponentially faster than classical machines. And this capability opens up new. Imagine a real time portfolio optimization across thousands of correlated assets. Imagine risk simulation that once took hours, reduced to milliseconds. Imagine a trading system that doesn't just react faster, but can process an astronomically large decision space evaluating market signals, counterparty behavior, and regulatory impacts, nevertheless, simultaneously and in real time. While the potential is vast, the challenge are equally significant from hardware limitations to algorithm development and critically integration into today's market infrastructure. In this presentation, we will explore how quantum computing is used in trading, where the real computational advantages lie, what quantum accelerated financial future might actually look like. As you all know, these days, this isn't science fiction anymore. This is a paradigm shift in how markets move. I'm the senior technologist with Owen's in the investment bank, specializing in delivering high performance, cost effective technology solutions. My expertise spans across fixed income trading, risk management, regulatory compliance, client reporting, and I have extensively worked with the industry leading products, trading products such as Ion, broker, broker dealers like TradeWeb, Bloomberg, and Wall Street FX, which is also a product of Ion. Throughout my career, I have built a reputation for managing, designing, and optimizing advanced technology infrastructures that support critical business operations in the capital markets and financial services. I have a deep understanding of the fixed income trading platforms and the businesses, commodity trading platforms capability, particularly in managing and streamlining fixed income trading processes. I have involved in the design, development, optimization of algorithmic trading strategies that leverage advanced quantitative models, market data, and my work include implementing high trading algorithms, market making strategies, risk adjusted trading strategies that are significantly improve trade execution and efficiency. With a deep understanding of order execution venues, liquidity management, I have worked to fine tune algorithmic strategies that optimize slippage, reduce trading costs, and minimize market impact. I have a diverse range of financial experience in financial products such as US Treasuries, swaps, credit, equities, and OTC derivatives. That's a short summary about me. Now let's deep dive into the quantum accelerated trading systems, which is revolutionizing financial markets through computational advantage. Unprecedented volumes of data, leading exchanges generating 342 billion market data messages daily. That's an incredible and unbelievable amount of data that we process. Traditional computing architectures face fundamental limitations in processing this information efficiently. Our research explores how quantum computing algorithms are transforming HFT infrastructure, offering significant computational advanced high-stake environment. Going on to the next slide. Quantum advantage in fintech. Overwhelming recognition of quantum computing's transformative potential in trading systems. The significant improvements in both processing speed and resource efficiency demonstrate why leading firms are rapidly adopting these technologies. 94% on the leadership recognition, financial technology leaders identify quantum advantage as critical for the next generation trading systems. Calculation speed, reduction in complex calculation time compared to the classical approaches. 78% of calculation speed that has been reduced. So things which used to take, let's say, 1 hour, about 80% have been reduced in doing the calculation for the high frequency trading. 67% of the resource efficiencies, decrease in the computational resource requirements while implementing quantum inspired algorithms. Parameter processing capabilities. The stark difference in parameter processing capabilities translates directly to competitive edge in algorithmic trading, where model sophistication drives profitability. Quantum enhanced systems leveraging quantum technique demonstrated that they can process optimization problems with 3.5 times more parameters while maintaining sub-millisecond response times. This expanded parameter space enables more sophisticated trading models that can incorporate a wider range of market factors and signals simultaneously. Traditional computing approaches manages only 1.4 times parameter capacity under the same latency conditions, significantly limiting model complexity. These systems struggle to incorporate the full range of relevant market variables, leading to less optimized trades based on incomplete information. The response times, as you see in the chart, quantum enhanced the in high frequency trading where nanoseconds can determine profit or loss. This advantage represents a revolutionary leap forward in execution capabilities. The integration of quantum algorithms with the acceleration has enabled superior pattern recognition capabilities in trading systems. That this technological combination allows for industry average of about 145 microseconds. Machine learning performance improvements. These enhanced models can identify complex market patterns invisible to classical algorithms, enabling more precise entries and exits in volatile market conditions. Quantum machine learning techniques have demonstrated remarkable improvements in accuracy while maintaining the stringent latency requirements essential for high frequency trading applications. Where 41% reduction in change in forecasting. As you see in this chart, latency requirements, sub-millisecond processing, superior prediction accuracy, 41% reduction in error rates. This is one interesting case study implementation at a tier one trading firms. This case study followed three-tier trading firms through their complete implementation journeys. Each organization followed a similar process assessment for a process of assessment, development, integration, and evaluation with performance improvements of the initial assessment, basically identification of computational bottlenecks in existing trading infrastructure, algorithm development, creation of quantum-inspired optimization algorithms tailored for portfolio management, infrastructure integration, deployment of hybrid quantum classical computing architecture, and finally the performance evaluation measurement of about like 80% of reduction in calculation time across the complex trading operations. Quantum classical hybrid framework. This architecture has been validated across multiple asset classes, consistently delivering 99.9% execution reliability while enabling implementation of advanced trading strategies. The quantum classical hybrid framework leverages the strength of each computational paradigm. Classical systems handle high volume data ingestion. Quantum processors tackle complex optimization problems, and the hardware, the FPGA hardware, provides a deterministic execution with minimal latency. The data ingestion, high throughput market data processing via classical systems, ultra low latency complex calculations offloaded to quantum processors, and the hardware level implementation of optimized algorithm. Competitive implementation timeline advantage. Classical computing approach. The implementation of timeline advantage represents perhaps the most significant competitive edge for early adopted to market advantage. Translates directly to capturing trading opportunities before competitors. This first mover advantage is particularly valuable in emerging market situation and during the periods of heightened volatility where the heavy duty of sell and the volatility in the dealer to dealer platform or dealer to client platform, D2C market happens, then the market advantage is huge. Classical computing approach, the traditional implementation pathways require extensive development cycles for new trading strategies. The complex risk models and optimization routines can take months to develop, test, and deploy using conventional computing resources. But The quantum enhanced approach. Firms utilizing the quantum enhanced computing frameworks can implement advanced strategies, which is 3.5 times faster than the acceleration comes from both computational speed and superior parameter optimization. This self-explanatory. If you look at it at the equities, fixed income, the multi-asset performance analysis, latency improvement, equities 82%, 2.5%. This is one area where the error reduction we have a lot of opportunity to reduce to 50%. The latency improvement is 80%, 75%, and the parameter capacity is 3%. For foreign exchange, amazing return of investment for the latency improvement using quantum accelerated systems, 3%. Commodity trading, 79%. Latency improvement, 3%, sorry, 3 times parameter capacity, and error reduction of 39%. Derivatives, over the 88% latency improvement, 90% of latency improvement can be achieved. 3.5%, 5 times parameter capacity, and 47% error reduction. Equities and FX markets also showed remarkable improvements, particularly in latency reduction and error rate minimization. Our research validated the quantum classical hybrids framework across all major asset classes, while performance improvements were substantial. Most significant gains were observed in derivative tradings, where the complex mathematical models benefit most from quantum optimization. Now, the interesting topic, challenges. Now that we have spoken extensively on the advantages of quantum accelerated tradings, what are the challenges? Second, system reliability. Third, integration complexity. And fourth, regulatory considerations. Let's go through one by one. The limited pool of professionals is in both quantum computing and financial markets. Remember, you can get somebody with a heavy duty math knowledge or a heavy duty comprehending the financial markets presents a significant barrier to the implementation. However, we identify for quantum computing has to have extensive knowledge in both finance and the technology skill set. Leading firms are addressing this through specialized training programs and partnership with academic institutions. Early quantum processors have higher error rates than classical systems. Hybrid architectures mitigate this by implementing error correction protocols and verification methods that ensure 99% execution reliability. Integration complexity, systems with the quantum computing systems. Connecting quantum processing capabilities and APIs that shield trading systems from the complexities of quantum operation while maintaining the performance. Finally, the regulatory and compliance considerations. Financial regulators are still developing frameworks for quantum enhanced trading systems. Forward firms are proactively engaging with regulatory bodies to establish different operational standards. So extensive analysis and research are being carried out on the trade surveillance and the spoofing related activities, which is very closely tied with the trading systems. Future outlook and strategic recommendations. The quantum revolution in finance, they begin with targeted applications. So developing a hybrid architecture and preparing for a quantum advantage scaling begins with a targeted application. Start by, for any future outlook, right? Start by applying quantum enhanced algorithms to specific computational bottlenecks in the portfolio optimization in US Treasury trading, rather than completely expanding the scope across all the rates, commodities, credit, but rather narrow down to one particular segment under the fixed income portfolio, under US Treasuries, let's say focus only on the T notes or some level of US Treasuries. And derivative pricing are actual applications that provide built internal capabilities in quantum classical hybrid system design. The most successful implementations will leverage both paradigms using quantum processors for optimization problems while maintaining classical systems for deterministic operation. Preparing for quantum advantageous scaling. As quantum hardware matures over the next 3 to 5 years, prepared trading systems to now will be positioned to rapidly expand capabilities as the technology evolves. Quantum revolution in, like I said, the financial world is no longer a theory. It is happening, and several firms, the firms which I am working, are trying to organizations that embrace quantum enhanced trading systems that today will establish competitive advantages that will be difficult for laggards to overcome. But the end of time implementation speed advantage compounds over time, creating an expanding capability gap between leaders and followers. And that comes to the end of this presentation. Science fiction